Good morning, ladies and gentlemen. Welcome back to the channel. Today, what on earth happened to the volume on GME just days or weeks after its best quarter one report in company history? We are also on the precipice of potentially getting eBay news with GME and maybe some clarity on Ryan Cohen, who said that he's going to invest $500 million of personal capital in this deal. First things first, this is not financial advice. This is educational content or opinion content only with a look at the fundamentals today and data. So, XRT, we just got new fails to deliver data. We will comb through those in a little bit. It's still on reg show. This is the 39th day, and you could insert so many different memes here about Groundhog Day or being tired of it or blah, 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 blah. That's not the point. The point is not to get burnt out by it. The point is not to let the emotional mind games, take over here and say, oh, what's going on with this company? Because it's just the stock price right now. And I like to think of the flip side. Obviously, I am majorly bullish on GME. I had a buy order out for 90 shares this morning. I think I got 83 filled or something. Anyway, there's still some out. I'm hoping to get more, but I'm loving the opportunity to continue to accumulate shares in the low 20s, whether it's 20, 21, 22, 21.97 or whatever I got them filled at this morning, because I'm looking back, okay, I'm looking back in the time frame of before the January of 2021 events. I'm trying to put myself in that position of if I'm on the wrong side of this trade, if I am on the short side of this trade. And back here, the earnings report in September of 2019, when they missed earnings by 74.55% and revenue by 52.59 million. I'm thinking to myself, excellent, excellent news. We can continue to, short this company into oblivion, and they really might be susceptible to going under. And then the next quarterly report here, September of 2020, they miss earnings by 23%. They miss revenue by $77 million. And you're thinking, yippee. And then, the console cycle comes back and blah, blah, blah. The rest writes itself, right? And then the company continues to stall out again, right? After the console cycle kind of dies down, people are ordering less hardware, software is down, et cetera, right? Then Ryan Cohen steps into the driver's seat, and then you just see green, 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 green. And now for the past probably 10, 11, 12, 13, 14, we've got 90% profitability here and then 8 profitable quarters in a row. So if I'm now on the same side of that trade and I'm still stuck in my position, I've got to be panicking. And if I'm not panicking, I'm at least sweating. And if I'm not at least sweating, I'm nervous. Because of the fact of the matter is GameStop has proven, with or without eBay, that they are a profitable enterprise whose underlying business now is better than it was back then. And I'm not trying to sound like a broken record. I like to remind myself of those things and specifically the 87.5% earnings beat in quarter one of 2026, which happens to be their best quarter one report in company history, and their $68.67 million revenue beat in quarter one as well. When I was told by the media, forget GameStop, look elsewhere. Why would I do that when the company's obviously turned itself around and is in better shape than prior to it running 5,000%? Why would I turn away from that? I wouldn't. And that's why I'm buying more. And quite frankly, I am not, a totally immune to the throes of the boring price action. Whether it be, buying options or selling options or straddling or whatever, all of that's been thrown into a blender of implied volatility drainage where there's none left. And so it's at a really, I think we're at a time, and again, this is not a certainty. This is just what the chart is telling us. We are in a sign of severe downturn suppression on the equity with a combination of incredibly low IV. And we are so hovering just off, it looks like a double bottom here off of a stock that the option chain is super dry right now. It's, don't light the match near all the dry, pine needles type of situation here, because this thing could catch fire quickly. And that's just my opinion, and that's not advice. I think it's just, point being, I think it's a very dangerous game to continue to play if you're on the wrong side of this thing. And you couldn't really say that, even back here, you couldn't really say that, right before Roaring Kitty return, they had just missed earnings by 25%. Revenue was a $256 million miss. Their next report, they had missed earnings by 33%, revenue by 113 million. So that opportunity when Roaring Kitty came back, and I think that's what the handshake meme was from Roaring Kitty's, one of his many posts then, of the office meme of them kind of, standing side by side or shaking hands or whatever it was. It's like, hey, the company is going to benefit from this move right here. And I think that is the turnaround, Project Genesis. That is the rebirth of the company. Now you have 8 quarters of profitability under your belt. And this last one, you have revenue looking really good as well. So that's my little soapbox opinion for the day. The data, let's dive into the data. First things first, there is no volume left. Okay. So we have been, since this earnings report here that GME releases on Tuesday, June 2 of 2026, the day after, we have 17 million, which again, just that alone, 17 million shares traded on this ticker in a single day is nothing, when especially you're coming off a blockbuster earnings report. I mean, that is like Sahara Desert level dry. And it just drops down to 4.4, 6, 4, 4, 6, 6, 4, 4 flat, 3.3, 3.83, 5, 4, and back to 4 yesterday on Tuesday. So you're kind of sitting here and going, where did it all go? Well, certainly that has to be indicative of something XRT in combination on reg show for the 39th day in a row, and the lend pool fee ticking up to 0.57% with a 3.05% rebate this morning. It's starting to creep up again, and it's just certainly indicative that there's something going on. Now, there were some bigger orders yesterday coming across in the dark pool. I don't know if I have the post up or not, but I did see some people talking about it. There were blocks, in the couple $1 million notional. Here you go. There you go. 110,000 shares for 2.44, 207,000 shares. This on June 30, guys, is the quarter end for funds, and it is the rebalancing as well. So you're just seeing, whether it's a Russell fund or this and that, or a hedge fund, they simply rebalancing. Those are dark pool orders, not going to move the needle, not going to affect the ticker tape here, unfortunately. Good to see, but ultimately the end game here is S&P 500 inclusion. Okay, so we can do the little stuff all we want, blah blah blah. The end game is crystal clear, and GME is on their way to doing that with their recent success. So the data, I was combing through this yesterday, and I didn't see much failure to delivers on GME. Really, they've gotten it down pretty well to not affect the underlying, since we had that real big blip here in December of 2025. So the underlying is not really a concern. XRT is funny because they're not that high, but we're so immune now to like seeing this. We're desensitized is probably a bit. We're desensitized. They don't just affect us much as like they used to. You'll see the most here, obviously, in May. I don't think we've seen anything like that do. I don't know how they've been able to kick it around, if they have, or if they're getting creative, but they're starting to really bubble up here, and just consistently in the 10 to 30 million dollar, even 50 million dollar notional amount on any given day. That's a lot of money to be failing to deliver on this ETF, which goes hand in hand with GME. I looked at IWM is, I'll show you in a couple other interesting ones. IWM is one I've been looking at as well. These are, again, very large, like 112 million in a single day. You had the month before that in May, 759 million, 446 million. So these are high as well. Not as high as we've seen in the past, but definitely indicative that, there's certainly something going on. The ones I wanted to highlight was the movie stock AMC had its highest level of single day fails to deliver here in early June. on June 1st and May 29 that it's had since 2024. And that's notable to me because in June of 2024, the stock price was trading around $5. It's now trading at $1.83. So you have a very large discrepancy there. And yeah, maybe the share count's higher, but it's, if there is a bankruptcy basket or something to that effect, you're certainly, you could be seeing some cracking at the seams. Okay. Chewy, another interesting one, which I believe is swapped with or against GME in some cases, had its largest fails to deliver since all the way back here when Roaring Kitty dropped his entire position September 20 of 2024, right? You have your largest batch here as well, which notional isn't that much, but it's all happening coincidentally around June 1 and June 2. And June 2 was the day that GME released their surprise earnings report. So again, you can try and connect the dots here all you want to your, blue in the face, but it's just worth keeping an eye on how these things are popping up. I checked IJH, I checked IWB, not seeing a whole lot there. And then VXF for the total market or extended market rather with costs. You're not seeing a ton. You're seeing some, but not a ton. So, we just point being here is there are fails kicking around, but ultimately, I think some of the white papers have alluded to in the overall thought mechanics that when fails are decreasing, theoretically they are being cleaned up, and that should lead to a maybe in some cases a price appreciation. And we have seen fails starting to dissipate slightly, so we'll have to see if that logic plays true. The other thing I wanted to touch on in today's video was this language here in Ryan Cohen withdrawing his performance award on June 23 of 2026. This line here, additional details can be found on the SEC website, and that GME will release additional materials regarding its proposed acquisition of eBay this week, including a detailed presentation of the strategic rationale and operational plan for the combined company. That was June 23. It's now July 1. And we have not seen, that would be 7-8 days now since then. We've not seen this presentation. So I'm not sure what kind of week calendar they're going off of, or a number of things could have happened. But they did release in that span adjusted EBITDA and raised it significantly, almost 100% increase projections, which they don't do ever. So there's clearly something going on with the company. XRT still being on Reg Show, I highly doubt Ryan Cohen's like, oh, it has to come off Reg Show before we can release this. I don't think that's going on. I'm sure whatever it is, they have a plan, one. And then two, in order to release this public facing, it has to be completely buttoned up. Someone has to go through layers of quality control on it to make sure everything adds up. I'm trying my hardest not to make a reference here, guys, to who, Voldemort. But you get the point. It's got to be totally buttoned up. So I'm very much hoping that we get that news into the weekend here. We have the market close July 3, an observation of July 4. Happy America 250 to all the patriots out there on this channel. But that's my hope. So, not sure what happened to it. That's all I know. I'm eagerly waiting because GME has got to stay on offense. As they continue to drive this stock down or keep it muted after the fundamental turnaround that this business has had, and with them in the arena trying to acquire a cash cow in eBay. So there's something more going on here. And GME, in my opinion, will prevail.